One final question from me for HODL is how you intend on handling a really big dip in price. You know, we've seen it before, 60, 70% crash in price. A lot of people are suggesting, oh, it's not going to happen anymore because we've seen too much institutional adoption of Bitcoin. And I'm somewhat convinced, but I've heard every single bull market that has been said for a different reason. And I think that there is a little bit more evidence with the ETFs this time, particularly, potentially a degree of stability. And I've seen people draw parallels with the early gold ETFs, which caused gold to only go up in price more or less for 8 years straight. Then again, gold wasn't quite as cyclical. So I don't know really where that puts us, but I do expect we'll see some big old crash and a big correction. How is HODL ready to handle that?
I'm glad you asked that, because for the team putting the company together, and we've been working on this for quite a long time from foundation, that has been absolutely key to us. And one of the key differentiating factors for us, we feel, is that we've got a bunch of Bitcoiners together who have seen at least 2, and in many cases 3 bear markets together. So this is a very real concern for us. In practical terms, what we've done is and it's very simple, we have planned to be able to survive for 4 years without making any revenue at all, and to get to the other side effectively of a potential 90% drawdown. Although I kind of agree with you. I think the likelihood of such an aggressive drawdown is small, but we've taken a very conservative approach to our cash flow and our solvency. So my own personal background, I used to be a restructuring and insolvency lawyer. I've seen how becoming a forced seller or having to exit positions can completely destroy you. So we're doing 2 things off the bat. Firstly, we're not taking on any debt, and we're running very light. So our running costs for the business are very, very low. Secondly, and this is more importantly, of our initial raise, we're putting away 4 years worth of running costs in fiat, and we're not going. We've said this in our public statements. We are not going to be converting those 4 years worth of runway into Bitcoin simply as a hedge against there being a gigantic downturn. The last thing that we want to do is to become a forced seller of Bitcoin. So any Bitcoin we acquire, we want to use. And frankly, our business model doesn't make sense unless we're using the Bitcoin and using it to make money. So our modeling, again, is very conservative. We have modeled no revenue for 4 years, which we think is very pessimistic. We think we'll be able to make revenue, but our results will speak for themselves. And secondly, we're going to have that money in fiat. So even if there is a gigantic crash, we know that we've got 4 years worth of operating runway, during which we will build up our revenue generating business via running and building these nodes.